Hello, welcome back to Duca's Copy TV. Well, it's almost been a week since Francois Hollande defeated Nicolas Sarkozy in the French elections. At the time, the euro dropped by over 3%, and it's been running at a 3-month low against the dollar. Well, with me in the studio is Valentin Marinov, the director of CitiFX Pro. Valentin, can I first start by asking you, what has the atmosphere been like so far amongst FX providers such as yourself? I mean, since the French election results and obviously the current problems in Greece at the moment.
Yeah, all focus is on Europe at the moment. People certainly trying to predict what will happen, in particular in Greece, with another round of negotiations between the political parties. They're really trying to find a coalition, sustainable solution to the political crisis there, and people are uncertain, hence the weakness in the euro. As regards Hollande's win, remains to be seen. A few developments in coming weeks. The meeting between Hollande and Merkel next week, and then the unofficial EU summit will clearly provide more indication as to where that debate about austerity versus growth in the Eurozone is heading. In the interim, all that uncertainty likely to continue to add to the headwinds for the single currency.
And is that making it quite difficult for you at the moment?
Well, I mean, at present, it is indeed difficult to predict which way it is going, but I suspect that we are not the only ones really experiencing kind of such a difficult, really the lack of consensus is widespread at the moment in the market. So people are really looking for ways to express a euro bearish view. And it seems like out of all the currencies, euro sterling actually has been evolving into a kind of a proxy short euro trade. Needless to say, if indeed the situation is to deteriorate further in the Eurozone, euro dollar could extend its drop on the.
Okay, now with Hollande at the helm now in France, obviously, and as we said, as the Greeks entering a 5th day of talks to try and form a government, some analysts are predicting barely any change in euro volatility over the coming weeks. Is this surprising?
Well, in many ways, actually, the decoupling between the Eurozone euro volatility and its fundamental drivers is a bit surprising. Over longer periods of time, euro-dollar volatility seems to be positively correlated with the developments in the sovereign debt markets, that is, surging funding costs for the likes of Italy and Spain, fueling euro-dollar implied volatility. Over the last few weeks, even months actually, since the end of the last bout of LTRO, really, what we saw was a decoupling between the ever lower really euro-dollar implied volatility and the widening or the surging funding costs for Italy and Spain. I suspect that this is highlighting that the risks for implied volatility are on the upside for the near term, especially if we see further deterioration in the uncertainty, if you wish, especially in the case of Greece.
So moving on to the pound then, as you can see by the graph behind me, it's at a 3-year high against the euro. The elections, including Greece's plus other euro problems, haven't really had any effect on sterling's gains. What do you think about the long term?
Well, I suspect that it'll be very difficult for the UK as an economy to really decouple from any further deterioration or escalation in the Eurozone debt and economic crisis. 60% of the UK exports are still going to the European Union. The exposure of large UK banks to the countries in the Eurozone we expect to remain in recession is almost 30% of the UK GDP. So chances are that further deterioration, the cyclical outlook for the Eurozone, likely to weigh on the outlook for the Eurozone, for the UK. From that point of view, I suspect there is always a limit to which really sterling could appreciate if the situation for the euro deteriorates. From that point of view, also I suspect that the risks for the likes of sterling dollar or sterling yen are firmly on the downside given the uncertainty regarding euro. That all said, euro sterling is again evolving in a proxy short euro trade, much like euro Swiss last year, if you wish, where people are just willing to sell euro Swiss against the odds, regardless of the prospect for SNB intervention or whatever have you. Right now, people are kind of willing to really just not consider the deteriorating fundamentals in the UK, the fact that the economy just slipped into another recession, and just really focus on the fact that euro sterling is performing so well as a short euro trade.
It is incredible that as well, despite they're going through a recession. You mentioned the Swissy there, and how are we looking there for the long term?
For now, it seems like the peg is holding, and it seems like the S&B is willing to keep it where it is. A lot of market analysts, not including us actually, but a lot of market analysts have been arguing that a peg should be raised and effectively to address the issue with deflation. We have to recognize, however, that for the S&B, any increase in that floor, in that level, really represents a risk. Effectively, it will really flush all the longs that we see right now in the market, effectively leaving the market fairly neutral, and which means really leaving it open to another speculation on the downside. That is risk which I think the S&B is unwilling to take for now, which also given the uncertainty regarding Greece or potentially uncertainty regarding Spain, its Spanish banking sector, all that may mean that actually the S&B will be on hold for now. Going forward, if indeed we see potential further deterioration in the Swiss economic fundamentals, we see the problem with deflation actually escalating from here. The S&B will be forced under such circumstances to raise the peg to combat deflation.
Thanks very much for coming into the studio again, Valentin.
It was my pleasure. Thank you for having me.
Well, that's all we've got time for on Dukas Copy TV. Stick with us throughout the day, though, as we bring you the latest updates and exclusive interviews. But until next time, goodbye.